It's summertime, it's heating up outside, and you guys are probably wondering, how can I get a pool put in my backyard? Michelle is going to talk to us today about some different finance options on how you can potentially put a pool in your backyard if that's something you want to do. So I'm sure you get this question all the time. People have maybe been living there for a while. They've built up some equity. What are the, like, in your opinion, what are the best routes to go if you want to finance a pool?
Well, if you have the equity in your home where you could do a home equity loan, that might be a good option.
Okay.
But it might not, because if you've got a really low interest rate right now, you wouldn't necessarily want to refinance and use the equity to put in a pool.
Right.
So then what do you do? I mean, if you have a 3 or 4% interest rate, chances are you're not going to want to, you just want to leave that alone, because that's a once in a lifetime rate. So another option is a home improvement loan. So on a home improvement loan, you have a fixed amount that you will be able to borrow based on the cost and the added value to the home based on the improvements that are going to be made. And so you basically have, it's a fixed rate, second lien, with a fixed payment.
Gotcha.
And so that is an option. Another option is doing a home equity line of credit. And so if you've got, say you've got $100,000 in equity that you can use, then you basically have up to $100,000 that you could use in a line of credit. And your payment would fluctuate based on how much of that $100,000 you used. So it wouldn't be a fixed rate.
Gotcha.
Closing costs are a little bit less a lot of times on those line of credits versus a home improvement loan. But a lot of your pool companies have the ability to give you an unsecured loan for you to put in a pool. Now, the only problem with an unsecured loan is it's going to be a higher interest rate because it's not secured. There's no collateral. But it's a good option if you think that in the next year or two you can just pay in chunks of money. Maybe you get a bonus every quarter, whatever, and you can put that towards the pool loan and get it paid off. Closing costs are really minimum. It's the fastest way to get money to put in a pool, and that's an option too. The only trouble that people get into is that if for some reason, I think of Christmas Vacation, when Clark thinks he's getting that big bonus and he doesn't, and he gets Jelly of the Month Club instead, and he was going to use that money to put a pool in. Remember?
Yes.
So, if there's, you're counting on future money to pay it off, and it's at a higher rate, so you could financially get yourself in a jam. And you can't just do a refinance to pay off an unsecured loan in the state of Texas without having at least 20% equity remaining in the property after you do the refinance.
Gotcha.
So that gets a little bit tricky too. So there's a lot of different ways to finance a pool. You just have to know what are the laws for the state that I'm borrowing the money, and really work through those scenarios and see really what is the best option for you. But my question to you is, and I know that there's not just a chart that you look in and go, okay, I'm going to put in a pool and it's going to add X number of dollars to the value of the home. But that matters to me if I'm loaning money on the home. So we have to take that into consideration too. So, what are your thoughts on the value you add with the pool?
So I've talked to several appraisers about this because, and it can be location specific as well, which is kind of interesting, but there are certain neighborhoods where there's not enough sales data to support
market demand
for a pool. And so sometimes putting a pool in is, yes, you get the enjoyment, you get the you get to enjoy the pool while it's there, but you're not getting a huge return. I'd say it's very rare that you even get a dollar for dollar return on a pool. Most appraisers that I talk to say a good rule of thumb is probably about 50% of the value of the pool.
That's what I've heard too.
But once again,
I have that house that I sold in Pottsboro.
Yes.
In that neighborhood, like if you were to do a drone picture, an aerial, you would see most backyards have a pool.
Right.
So people in that neighborhood, and it's close to what 12 years of school.
Yeah.
So it's usually it's a family neighborhood, and a pool is expected.
Right.
And I remember when I put the pool in our backyard, a year and a half or 2 years later, when I sold the house, I did get dollar for dollar, and I was talking to the appraiser about that, and that's because it's expected for that neighborhood.
Right. And that's the same thing. Like, I know O'Hanlon Ranch in Sherman is one of those neighborhoods where it's expected, and it can really drastically increase the value of the home. And so and there's also, whenever I say appraisers will give 50% of the value of the pool,
It's still not a book or a chart that says that.
There's not a chart. And you also have to take into consideration, like, is this a pre-COVID value of putting in a pool, or like a post-COVID value of putting in a pool?
No
Because
kidding.
we're still kind of on the, like, putting in a pool is not what it used to be back in the...
You could put in a pool for $80,000.
Yeah.
2 years later, it's $125,000.
Exactly. And like, that would be $80,000 would get you like pool, spa, like covered patio,
5
fire
years
pit,
ago.
you know, it gets you everything you want in a pool, like top of the line. And then, yeah, now it's like, if you want a pool with just water, you're at least $100,000.
A little bit of concrete around it.
A little bit of concrete around it. That's also something to consider. And the market will eventually catch up to that. But there's also, we're kind of in that weird spot of like, you know, an appraiser's like, well, I know, 5 years ago, this pool was a $40,000 pool. Now it's a $100,000 pool, or $80,000, wherever it is. So like, I don't really give it the value that you're giving it as a homeowner. And so that's something to take into consideration.
If you plan on moving in the next year or two, likely not a good investment.
Exactly.
If you're going to be there for 5 or 6 years so it can kind of level itself back out, and you enjoy it, do it.
You know the best way to get a pool?
Is buy a house with a pool.
Buy a house that already has a pool.
That's right.
Yeah, but if you're...
And I know a guy.
You know a guy that can help them buy?
That's right.
And I know a gal that can loan them money for that.
That's right.
I will say, obviously you might not want to move just to buy a pool. So that's why we wanted to make this episode talking about how you could finance that. Like, if you're in your dream home, you don't want to move, and you're in your favorite neighborhood, there are options out there. Obviously, you want to consult somebody like Michelle, who can show you all the options. They can talk to you about, how that's going to affect your payment, your finances, and make sure you're not putting yourself in a position where a year down the road, you're financially, like you said, if you're expecting that bonus and it doesn't come, and you took out a line of credit or an unsecured loan to get it, that might not be the best option. But there's also a chance that it could be. So all that to say, talk to Michelle. That's all we've got about pools and financing your pool if you want to build one. If you have any questions about what it could do to your home's value, be sure and reach out to me. Once again, this is Cory. This is Michelle. And thanks for checking out this episode of the Unlocking Doors podcast.
Yo!